We are looking at Friday, February 14, and talking about what happened with the levels that we had for the day and where they might be going based on what they did on Friday. Today is Monday, President's Day. Markets closed, and I just now had time to get back in front of the screens and record this video to do the recap. So what did they do? Well, on Friday, they made a new high, just barely. The previous high was over here on the 24th of January, 610.78. On Friday, they went up a little higher, 610.99, and pulled back. So pretty much flat all day and very low volume. One thing that could come into play tomorrow is, let's look at these two highs here. We had the high, the lower high, they busted through. We had these trend lines. I've removed the trend lines right now. So this becomes a trend line here. That's, important high there, important high. If they can get above this, then they're just going to keep climbing unless something else happens. Now, we have some timing components in our favor for a pullback if we look at some smaller time frames. But right now, they're just kind of undecided. They could not close above the former high. Might as well just put a line on the chart to show you where that was. That was the former high. They spiked it, came back, closed below, and just pretty much went to sleep for the rest of the day. And we might as well take a look at the weekly chart because this was Friday's close. A couple observations we could make here is Tuesday, tomorrow, when the market opens, the equities market, they could gap above this. We do have the advantage of seeing what the futures is doing right now, but there could be some differences between right now at 9:30 p.m. and when the market opens in the morning, 12 hours from now. But currently they've climbed a little bit, so they could gap above. That would be pretty strong for the bulls, but they could pull down. I mean, I'm pretty much stating the obvious. They didn't get a nice, strong weekly close above the former highs, so we're going to wait to see what the pre-market session looks like, make some decisions. We'll have levels in the morning, of course. Let's take a look at the levels on Friday and see how they worked if you were playing by the rules. Here are the levels and the game plan. You can read them. You can see it was sent out a little earlier than usual. I knew I was going to be busy in the morning. I did not end up trading at all. I had the recording going most of the day until I left around 1:30 or so to catch a flight in the afternoon. I'll show you the recording just to show that I didn't take any trades, but you can read the game plan here so you can see what we were working with before the opening bell. Here are the levels. Just the one at 609.70 came into play, and the one trade was here. They came down pretty close early in the day. They were above the price, but we're not going to do anything until after 15 minutes has passed. So when that happened, they were well above this. They did come back down here around 10:42 a.m. They got to a low of 609.73. Would not have triggered the trade, but that's not a problem because we add a 5-cent buffer, and here's where it comes into play. Right here, that would have triggered the long trade in the futures, bounced up for at least a 4-point base hit or more. So first, you're not going to take any more of these. You're not going to trade on the long side unless you want to. They did bounce a few times. They got under the level here, just enough time passed to where if you wanted to, you could take a trade on the short side at 609.65, and that did not work. They got above. In fact, I'll just put some reference lines here to show you. This is the fumble threshold where you don't want to see closes above it. Now, because they kind of bounced off of this area and came back, that's kind of a sign that they probably are going to go higher at this point. We're just going to stick to a process and wait for closes above this. And if that's how you were trading, then you would have had a 10, I think a 10 and a quarter, 10.25 ES points. Given back, that's a fumble. You would have reversed, and the reversal would not have worked out either, and you would have lost 5 points as they fell. This is strictly playing by the rules. Now, I'm not sure I would have wanted to take a trade anyway. When the market was extremely slow, the volume had just dried up completely around 1 o'clock or so. But that's what happened, and sometimes you'll see that when volume is pretty low. These levels tend to work better when the volume is average or above average. So for what it's worth, I'll show you the recording of the morning, most of the morning. I was in meetings, I was pretty busy, but I just let this go, and I'll move ahead here to show you that I made a decision early on when I wasn't able to watch and trade anything, just to not do anything. So I was away from the computer most of the time until I think around 1:15 or so, and stopped this recording because I had to close up shop and left. I haven't been back in front of the screens until this evening. So no trades for me on Friday. So how did that fumble and TKO play out? A TKO is a technical knockout, and that's what I call when you have two fumbles in a row. So effectively, that's what happened. So after getting a base hit the first time on level 3, I know this is kind of hard to read with the red on top of the green, but that's how I'm showing that there was a 4-point base hit the first time it was traded. On that recycle, didn't work. That was 10 and a quarter points given back, plus a 5-point fumble again. So a TKO. That's how I like to track it. That way I can keep track of these metrics. 4 points for the base hit, whatever the fumble happened to be. In this case, reversal yielded another fumble. So 5 points there. So net negative 11 and a quarter. There's where you would have been. A negative $1,100 and some change if you're trading 2 contracts, both of those trades. Even so, rate of return so far this year is not too shabby. And a look at the log for the Sam's trades, no trades taken. This is the 609.70 that was hit, but I did not do anything with it. Just a couple examples of how you could have traded these levels. And you might be noticing, I could point this out right now, that most of the profitable trades tend to happen in the morning, before 11:30, 12 o'clock noon Eastern or so. If I had time to trade, I would have taken that first base hit and probably ignored anything after around 11:30 or so. But it's neither here nor there because it didn't happen. Just want to point out that you're more likely to have successful trades when volume is average or above average, and you have some liquidity and some movement in the market, which tends to happen before 11:30, 12 o'clock or so Eastern. So that's a wrap for today. The market opens back up tomorrow morning. Tuesday morning, we'll have levels on the board, a new game plan. Currently, the futures are kind of holding flat, maybe a little farther north than they were when they closed on Friday, but we'll find out tomorrow morning. I'll put out the levels. I'll send them via email with a game plan about what we might be able to expect. They could be in uncharted territory. And if they do, well, probably have a level or two, but definitely some levels if they pull back. But I don't want to presume at this point. I'll have a better feel tomorrow morning. So until then, I'll talk to you in the next recap video. Have a great day.